What if I told you that most traders lose money not because of a bad indicator, but because they take the wrong signals at the wrong time? In today's video, I'm going to show you a simple trend channel indicator strategy. And more importantly, I'll show you exactly which signals to take and which signals to completely ignore. Because that filter is what separates this strategy from random arrow following. And stay till the end, because later in this video, I'm going to attach this indicator live on the MT4 chart and test it in real market conditions so you can see exactly how it performs. No cherry-picked screenshots, real signals, real results. All right, let's get into it. Okay, so here's what you're seeing on the chart. This indicator draws a trend channel. Sometimes it turns white, and sometimes it turns red. And along with the channel, it generates arrow signals, blue arrows and red arrows. Now here's the golden rule of this strategy. And please don't skip this part, because this is where most people get it wrong. Rule number 1, the buy setup. When the price is trading above the white channel and the indicator gives you a blue arrow, that's your buy signal. Enter a buy trade with a 5-minute expiry. Rule number 2, and this is the important one. If the price is below the red channel and you still get a blue arrow, ignore it completely. I know it's tempting. The arrow is right there, but that signal is against the trend, and trading against the trend is how accounts get destroyed. Rule number 3, the sell setup. When the price is below the red channel and the indicator gives you a red arrow, that's your sell signal. Again, 5-minute expiry. Rule number 4, same logic in reverse. Price above the white channel with a red arrow, skip it. Wait for the next clean setup. See the pattern here? We only trade with the channel, never against it. The channel tells you the direction, the arrow tells you the timing. You need both to agree. That's the whole strategy. Now, the settings and timing. Set your chart time frame to 1 minute and keep your trade expiry at 5 minutes. The best results come during the European and New York sessions, when the market has real volume and clean momentum. And one more thing, stay away from major news events. During high-impact news, the market moves randomly, and no indicator in the world works reliably in those conditions. If you're into short-term scalping, you can also adapt this same channel logic for quick scalp entries. The concept works the same way. And yes, I've put the download link for this indicator in the description below, completely free, no payment, no catch. Risk reminder. Before we go live, one important thing. This video is for educational purposes only. No indicator wins every trade. Losses are a normal part of trading. Always practice on a demo account first, manage your risk on every single trade, and only trade with money you can afford to lose. Binary and Forex trading carry a high level of risk and may not be suitable for everyone. All right, now comes the part you've been waiting for. Let's attach this indicator to the MT4 chart and test these signals live on the trading platform. Now look carefully at the chart. The price is trading clearly below the red channel. The channel is above the candles, holding them down. That's our filter, and it's already telling us the direction. And there it is. A red arrow appears right below the channel. Price below the channel, red arrow signal. Both conditions agree. This is exactly the setup we defined earlier, so we go straight to the platform and place a lower trade with a 5-minute expiry. No hesitation, no second guessing. The rules made the decision for us, not our emotions. And here's where it gets interesting. Watch what happens next. Right after entry, the price doesn't drop immediately. It actually pushes slightly against us, and our position goes into the negative. This is the exact moment where most traders panic. They close early, they doubt the setup, they abandon a perfectly valid signal. But look at the chart again. Nothing has changed structurally. The price is still below the red channel. The trend is still intact. And then, the market does what the channel was hinting at all along. A strong bearish candle pushes the price down, and our position flips into profit territory. Notice how the red arrows keep appearing along the way. The indicator was consistent, we just needed to give it room. And there's the result. The trade closes in our favor. A clean win, exactly as the setup predicted. Let's move on to the next signal. Now switch your eyes to the chart. Notice the difference from the last setup. The channel has flipped. It's white now, and it's sitting below the candles, supporting them from underneath. The price is riding above it, step by step, making higher levels. And then the signal we've been waiting for. A blue arrow prints above the channel. Price above the white channel. Blue arrow confirmed. Both of our conditions line up perfectly, so we head to the platform and place a higher trade. Same discipline as before. The rules decide, we just execute. Now watch this closely, because the market rarely gives you a straight line. Right after we enter, the price stalls and dips slightly. Our position slips into the negative for a moment. And this is exactly where discipline gets tested. Your mind starts whispering that the signal was wrong. But go back to the chart and ask the only question that matters. Has anything actually broken? No. The price is still holding above the white channel. The structure is completely intact. That dip wasn't a reversal. It was just the market breathing. And then momentum returns. A strong bullish push lifts the price back up, and our position swings into profit. Look at those earlier blue arrows stacked along the channel. The indicator had been pointing in one direction the whole time. And there we go. The trade closes in our favor. The setup did exactly what the channel and the arrow told us it would. Let's move on. Back to the chart. The channel has turned white and settled below the candles, and the price is holding above it. That's our green light for buys. A blue arrow prints above the channel. Price above white. Blue arrow confirmed. Both conditions agree, so we go to the platform and place a higher trade. Same rules, same discipline, no exceptions. Now watch what happens. And I want you to see this one carefully. Instead of pushing higher, the price rolls over. A strong bearish candle appears and drags the price straight down, away from our entry. Our position goes deep into the negative, and it stays there. And notice something on the chart. Look at how flat that channel has become. It's not climbing anymore, it's sitting sideways. The price is chopping around it instead of trending away from it. That's the market telling us momentum has faded. And this is exactly the kind of condition where signals become unreliable. And there it is. That trade closed as a loss. Now, this is the moment that separates disciplined traders from everyone else. After a loss, most people do one of two things. They either quit in frustration or they jump into a random trade out of anger, trying to get it back. Both are account killers. We do neither. We simply go back to the chart and ask the same question we always ask. Does the market meet our conditions right now? And look, the price has pushed back up above the white channel and a fresh blue arrow prints. Same setup, same conditions, same rules. So we take the higher trade. Not because we lost last time, not to get anything back, only because the rules say yes. That's the mindset. Every trade is a brand new, independent event. Now watch the difference in behavior here, and this is where the market shows its hand. Almost immediately, a strong bullish candle fires up from our entry. There's no hesitation, no dip against us this time. The price pushes cleanly away from the channel, and our position moves into profit territory right away. Compare this to the last trade. There, the channel was flat, and the price was chopping around it. Here, the price is expanding away from the channel with real momentum behind it. Same indicator, same signal, completely different market energy. That's the subtle skill you develop over time, reading not just the signal, but the conditions the signal appears in. And there's our result. This one closes in profit. But please don't take the wrong lesson from this. The win didn't happen because we got our loss back. It happened because we followed the exact same process we followed on the losing trade. Same rules, same patience, different outcome. So let's bring it all together. You saw the wins and you saw the loss. I showed you both. Because anyone showing you only green results is selling you a fantasy, not teaching you a skill. Your takeaway in 3 lines: the channel gives you direction, the arrow gives you timing, and your discipline gives you everything else. Trade only when both conditions agree. Ignore every arrow that fights the channel. Avoid flat, choppy markets and major news events. The indicator link is in the description. Completely free. If this helped you, like, subscribe, and hit the bell. I test real strategies here honestly, every week. Thanks for watching till the end. Trade safe and trade smart.